Welcome back. We are speaking with Ben Gossack, portfolio manager at TD Asset Management. We've been talking about what's been happening in terms of the markets and how to examine those markets to understand the real strength of what's happening, underneath the indices sometimes, which can get distorted by big companies and what's happening. And Ben has told us a way that he was looking at industrials, but you've also done it with discretionaries. You've also done it with technology and also in healthcare, which I'm really interested in healthcare. So I want to get to all of them. But let's start with discretionary. Tell us what you did with this one. Okay, so when we talk about the discretionary sector, you're really talking about Tesla and Amazon. These two stocks represent about 50% of the discretionary market. So if you're looking at a relative strength chart, so if we take discretionary, we put it over the S&P, that's on the left-hand side, you can see it underperformed in 2022. We know what Amazon and Tesla did. And then we have a period of relative strength now for 2023. The rebound, yeah. And you'd say, yeah, that's 7 stocks driving the market. Yeah. Now, if we equalize and we treat every company equal and think about all the exposures that make up the discretionary sector, you have retail, you have auto companies, auto parts suppliers, tons of leisure, so hotel, you have cruise lines, you have gambling. There's a whole bunch of stuff that make up discretionary. We treat that all equally. And you almost have a similar story to what we see in industrials. You see a breakout of activity and relative strength also, I would argue, since April of 2022. And it's funny, too, because we do see, I just think about when we talk about the airlines, they're all hitting highs right now. Lots of people traveling right now. So again, the same thing where there is strength. We are seeing consumer strength in there. And then you push, it gives you an opportunity to push back around some narratives about the health of the consumer, how they're dealing with the rise in interest rates. And again, this is about owning stocks, outperforming benchmarks over the long run. So it's a question of, yes, there are things that are happening and impacting people's pocketbooks. And then there's a different discussion about what's happening within the stocks. Yeah. Let's take a look at technology and what you saw there. Yeah. So again, I don't disagree with the narrative. You have Apple and Microsoft and NVIDIA. Those 3 stocks are roughly 60% of the technology index, but there's 65 stocks within the technology index. And so when we put market cap technology over the S&P 500, there is outperformance in technology. I don't think I need to convince anyone about that. What I find fascinating is you have a very similar chart when you treat everybody equally. And what that tells you is not just Microsoft and NVIDIA and Apple, just about every technology stock on average, be it big or small, is outbreaking and is showing strength relative to the market. It's interesting because when you look at these ones, those are probably the most similar sets. They look the same when you kind of put the 2 side by side. But again, it pushes back around this narrative that it's only just 3 stocks. Lots of technology stocks are showing strength. Yeah, the breadth is definitely there. Okay, finally, I want to spend some time on this one, which is healthcare. Yeah, so healthcare, massive outperformance in 2022, specifically in pharma stocks. We're going on this interest rate hike. We saw technology stocks come down, other growth stocks come down, and healthcare was your safe haven. And you get this sort of rise up, and we saw a tremendous breakout for all these healthcare companies. And so the narrative would be, well, while we saw it outperform, the story for 2023 is abandon all ships, do not own healthcare. And again, I would agree with this on a market cap basis. We've seen many medical device companies, medical supply companies. We've seen certain pharma companies all come off their highs and underperform. But if you treat every healthcare stock equally and get rid of this distortion of market cap, on the right-hand side, it paints a completely different picture. It really does, yeah. You really kind of see this, I would say, this whole secular trend that is really kind of starting to kind of drive up on the right-hand side. And is it just some of the smaller players that it is, obviously, just some small, you're seeing the strength from those smaller players. And I'll ask you the same question I asked you about the industrials. What is the story, do you think, that's feeding that breadth that we're seeing? We have that slow-moving train of baby boomers. Yeah. And we know when you hit a certain age, you consume more let's say, more services and more things break, Ben. That's what happens. Right? You got to take more, drugs. So you consume more medical services. We've also had breakthroughs in innovation. Yeah. And so I would argue, when I look at a chart like that, I find it very exciting. We spend a lot of time in healthcare.
again, I think it's like industrials, an area for a portfolio manager, investor. There are lots of opportunities to do the work, have a process, have a philosophy, find stocks. And so while you might look at it on a market cap basis, healthcare is underperforming, if you found the right pharma company, the right biotechnology company, the right supplier, the right insurer, you can significantly outperform.
I think it was, not to put words in your mouth, but I know I was speaking with somebody last week talking about just the advances in AI. And again, that's a lot of it's priced in, but it's almost like the secondary advances that come from, developing new drugs, testing new drugs. In the healthcare space, they're saying, we've barely scratched the surface of what AI can actually do, and saying, in 10 years, we could each have our own bespoke drugs for my, breaking down body as I get older kind of thing. So it's amazing to say, and that's what I see, that's secular trend.
Yeah, we have, AI is being discussed. Just the fact that we're getting returns on the Human Genome Project, and we could see a drug this year that has a cure for sickle cell anemia, and that's going in and doing gene editing. There's some companies that are growing and they're silencing genes, and so you're seeing a lot of stuff even now about reducing sort of dementias like Alzheimer's. Doesn't cure it, but can reduce the onset. So there's a tremendous amount of activity and excitement. And then, you just have to do the work. It's not, You can't just buy a company. What's great about healthcare versus, let's say, technology, we see software companies improving. You can buy a lot of software companies. You could see developments in pharma, but if you buy the wrong pharma company, it could be disaster, or it could be, a great night.
Yep. Last thoughts. Just because overall, I would say this feels bullish. Feels bullish. Is there any caveat to go with this?
So I've been going about a thesis of less bearish. Lots of people are bearish. I have things that I'm bearish about. I've just felt that it's been better to be less bearish. Things I worry about, I'm always about that only the paranoid survive. So the stuff that I care about, the stuff that I think would change some of these trends, I do worry about a reacceleration of inflation.
Yeah.
I feel like that would change things. Right now, we're seeing the easy compares and we see inflation coming down. But if there was a reacceleration, that might change what I'm seeing right now. The other thing that I would say that I'm worried about is I do believe stock prices are leading indicators. They can factor in a lot of bad news, sometimes even a year and a half in advance. The only thing I can't tell you, Kim, is how much bad news they've factored in.
Right.
So every time something comes up and I'm like, oh, I didn't expect that.
Yeah, probability of 5% or 50%.
That looks new.
Yeah.
Was that factored in or not? So far, any of the bad news that we've seen, the headlines seem to have been factored in. But I'm always worried about that next headline being like, was that captured, or is that new information, and that changes the trends that we've been watching?
Ben, it's always a pleasure. Thanks so much.
Thanks for having me.
Ben Gossack, portfolio manager at TD Asset Management. Up next, we delve into estate planning for those without children and why that can sometimes make things even more complicated. Mindy Bannock, tax and estate planner, TD Wealth, will explain. That's coming up next. You're watching Money Talk.